Okay, so first, actually, Ben, are you able to see my screen?
Yeah, I can see that. It's all good.
Okay, perfect. So, yeah, so everybody, this is a recording of a webinar which was hosted today on the 7th of October at 12:30 p.m. That webinar was live, but unfortunately we had an issue with the recording. It didn't go to the cloud as expected. So the borrower, Ben Cullen, has very kindly agreed to come back on, and we're going to run through the webinar again for people who registered for that live webinar and weren't able to attend or missed the start. I've also made a note of all the questions and chat that we had during the webinar, so we'll go through each of those as and when is necessary as well. So this will be effectively like the live webinar, but unfortunately it's it's not the actual live webinar. It's recorded later that day. Okay, so we're going through as normal. So yeah, so thanks everyone who attended earlier today. Thanks for the questions, and obviously thanks as well to anyone who's going to be watching this recording afterwards. What I'll do is take you through a bit about who we are at Source Capital. I'll then explain a bit about our borrower, Ben Cullen, who's part of our Source network. I'll then explain a bit about the project and let Ben come in to talk in a bit more detail about how he found that project and a bit of the finer details as to what it is. We'll then go through the numbers and I'll explain the next steps as well. So this first slide is just saying hello from us. That's me, Stephen Wallis, in the top left there, Operations Director. Our Source Capital team is made of a blend of different people who bring an array of skills, expertise and experience to the projects. Directors share over 100 years of property experience and over 20 years of financial services experience, covering all aspects from investment banking to payments to consumer lending, peer-to-business lending and peer-to-peer property lending. Our directors and actually a lot of people within the team here at Source and Source Capital have their own property and investment portfolios, and we continue to work on our own developments as part of Source. As property industry leaders, the directors of Source use their experience by carefully selecting projects and overseeing them, ensuring they're the best projects for investment for Source Capital investors. So as I said, that's me in the top left. I think a lot of you will know Stephen Moss, our managing director, in the middle, and probably a lot of you have got to know John Wilson, our relationship director, as well. So a bit more about Source and about peer-to-peer and the platform. So we have flagship developments across the UK with a pipeline of over £277 million. We've got 100 plus offices across the UK. I think it's about 117 at the moment. And what that means is that this is the other side of the business, the franchise arm, where we have people who join us as a franchisee. They get training, support, and they ultimately, if they decide to do a project themselves, they can come through the Source Capital platform, and that's when they become a borrower for these projects. So we only lend to our own network. We don't lend to anyone else. And yeah, as I say, those offices are all across the UK, which helps us to diversify the types of projects which we put through Source Capital. So we have 100% repayment success to date. So obviously past performance is not a reliable indicator of future results, but one of our recent projects, which was around Barnsley, it was in a village just outside, as the project completed, the properties were put on the open market and they sold within 24 hours, which meant that investors were repaid their capital plus interest early. We also have zero fees that are charged to investors, so that means there's no fees in, no management fees, and no fees out. We believe that you should be receiving all of the return that's due to you, and those returns are up to 12% per annum. Peer-to-peer generally is only suitable for sophisticated investors and high net worth investors. There's forms you can fill in, which are available from the Financial Conduct Authority website and handbook, but instead there's an appropriateness test, which anyone who registered on the platform will have gone through that route, and that's so that you can show yourself to be a sophisticated investor without having to complete all the forms. It's important to note that your capital is at risk with peer-to-peer investing, and there is no financial services compensation scheme protection. Just at this point, it's also quite useful to point out the difference between peer-to-peer and crowdfunding for people who've heard of the two different terms. So peer-to-peer is debt. It's where you are a lender basically to the company. It's a loan, whereas crowdfunding is equity where you live and die with the success of the company. Essentially, you're not going to get an expected return at a certain date. Okay, just a bit about our values at Source Capital as well. So customers are at the heart of everything we do. We're fair, transparent, and want to continue to improve our service, providing a higher level of trust to our customers. Our vision is to make investing in property much more simple and easy. So we have a commitment to our customers. We are transparent. We take risk seriously. I'm actually a former chief risk officer of a bank. I've got a risk qualification as well. We are honest. We value diversity and innovation, and we always strive for constant improvement. Okay, so here's a bit about Ben Cullen. I'll get Ben on to speak shortly. Ben brings a wealth of knowledge and personal investment success into his property investment strategies. This, coupled with his support from the Source network, as I mentioned earlier, and his leverage of a highly experienced property team, have enabled him to access attractive property projects such as this one on Shinfield Road. Ben is local to the area and has a strong understanding of the market and demand in and around Reading. On completion of a full application, Ben, the borrower, was credit checked and a financial review has taken place. It's important to note that all borrowers go through the same identity checks through a process of Know Your Client (KYC) checks, and we establish their integrity through AML and anti-money laundering searches as well. So here's a bit of information about Ben's company. So it's Shinfield Road Development Limited. It's set up for this purpose, for this project. And as I said, so credit check, financial review, and AML check has been completed, and you can find out all the details there for anyone who wants to look up that information. So here's a bit about the delivery team, which is playing a major part, obviously, in this particular project. So they're called Silence Hern. It's silencehern.co.uk. It's saying they're the main contractor. This was a question that came up on our live session earlier. So actually, they are the consultancy firm, the project manager. So apologies for that typo there. The directors at Silence Hern Building Consultancy have over 35 years of industry experience between them. They specialise in project management for property owners, occupiers and developers, and have worked on projects ranging from a contract value of £100,000 up to £6 million. Again, yeah, there's their website if you want to go and take a look. And here's just a bit of information about some of their previous projects. So this one, 108 London Street, which was 7 units, so a conversion of a grade 2 listed office building to 7 residential units. You'll see that that's quite relevant for what we're about to discuss today. Basingstoke, £600,000 value demolition, of an office splitting into industrial units and refurbishment of a detached unit. Again, this is quite relevant to today. They also did a project in Kingston, which was converting and extending a 58-unit student accommodation block to become 63 co-living units. And then in Warwickshire, this is sort of the really nice sounding one. So they worked on a project where they demolished an existing property and built a new 6-bedroom country house and a pool house, which sounds very nice. So here's a bit more about Reading for those who aren't familiar with this location. So one of its claims to fame is that it's the largest town in the UK, or one of the largest, which is not actually a city. But aside from that, Reading's got everything else a big city could need: great amenities, great transport links, lots of large companies are based in and around Reading, and there's lots of well-paid jobs that this provides. So here's the project itself. So you can see there, it looks like the outside of an office. That's because it is an office. And it's currently vacant with a residential flat at the front of the ground floor. When we get into the floor plans, you'll start to see all that, and Ben can explain a bit more. Planning permission has been gained for the property to be converted into 5 dwellings. But it's quite interesting to note as well that Ben submitted another planning application to Reading Council to increase to 6 apartments. Which obviously would mean the GDV would increase should he be successful. But it's important to note that this is just an added bonus, that the project as it is with the 5 dwellings has been approved and is what we're discussing today. Just thinking about, I think there was a question around this. Yeah, so one of the questions that came up earlier was, would planning permission for the 6th apartment delay the build? Again, I'll let Ben talk to this in a second, because actually I think this is a good time to get him in just to talk about how he found this opportunity. So if you're there, Ben.
Yeah, I am. So this opportunity came to me through someone else within the Source network. They had it was an off-market opportunity, and I think they realised that it was on my patch. So we had a chat about it, and it wasn't something they were interested in doing themselves, but it was in the area that I was looking at, and it was the type of opportunity that I was looking at as well. So I went over and had a look, and we ran some numbers. You know, and we did some, you know, initial drawings to sort of mock up some sort of floor plans to see what we could get out of it. And we decided that, you know, it was for us, and we decided to pursue it. So yeah, as Stephen said, we've got planning permission for 5 dwellings. So it's going to be 2 2-bedroom flats and a 1-bedroom flat on the first floor. And then there's a large existing residential flat, which is it's a 3 or 4-bedroom flat, really. It's quite a large flat. And then another 2-bedroom flat at the back of the ground floor that's currently an office. As Stephen mentioned as well, we've created another planning application to split the existing large flat at the bottom into 2 1-bedroom flats. As Stephen said, it's a bonus if we get that, but we are quietly confident that we should get that. So
yeah, brilliant. All right, thanks, Ben. And yeah, I think we'll see all this come into life in some of the drawings in a couple of slides. But just for everyone's benefit, there's the office building itself. There you can see a bit of land behind as well. So it's this whole outline plot here that we're talking about today. So here's as it is at the moment. So there's this existing flat that Ben was talking about on the ground floor. There's some office space as well, and then the whole of the first floor is office. And I suppose this particular project is tapping into this movement from converting offices into residential, and yeah, Ben's taken advantage of an opportunity that, as he said, someone within the Source network brought it to him, and now he's bringing it to the Source Capital platform. So I think that is a little bit tricky to see. I think I prefer the sort of simpler drawing. So yeah, as you were just saying there, Ben, so we can see on the ground floor there's that existing flat, which may end up being two 1-bedroom flats. Then we've got the number 1, if everyone can see that on the left-hand side, that's the 2-bedroom apartment that's definitely being built as part of this. On the first floor, we've got apartment number 2, which is a 1-bedroom apartment, and then there's number 3, which has 2 bedrooms, and number 4, which also has 2 bedrooms. So there, I think it gives a good idea for what everything will look like once the project's completed. So here's an image and a CGI of how this will look at the end. And as they tend to do, they put some nice looking cars in and around. And actually, Ben, this probably leads us on to one of the questions we had earlier as well, as to whether the properties will be sold off plan. So are there some opportunities to market and sell these during the build?
Yeah, absolutely. I mean, we've already been speaking to some local agents regarding getting the properties listed while they're still being built. So yeah, those talks are already underway, but we'll definitely be looking to sell them off plan. And there was another question earlier that I didn't answer, which was, will the application for the 6th flat delay completion?
Yes.
Which it won't. We're starting off just on the 5 plan scheme. As we said earlier, the 6th flat is just a bonus, so it won't have any detrimental effects to, you know, when we can get started.
Yeah, brilliant. And now leading on to another question from the Q&A earlier. So we're trying to understand how long is the build timescale, and is there any reason why that might be delayed?
I mean, the build should be around, it's estimated around 4.5 months based on the 5-unit scheme, and, you know, maybe a couple more weeks for the 6-unit scheme. It's not going to take much longer to if we get 5 or 6. Delays wise, we shouldn't really be we're not really expecting too many delays. As we said in the earlier webinar, it's a purely internal alteration and mock-up of the flat. So we're not, taking the roof off. We're not moving any external walls. So it's purely internal. So it's the weather's not really going to affect us. So no, we're not really expecting too many delays on this one.
Okay, great. And then I think I'll come on maybe to I think when we get onto the valuations of the finished flats, I think we'll then talk about the multiple exits, because I know you mentioned an interesting proposition for selling them all in one go, but we'll just cover off a few slides before that. So just for everyone listening in, so the property is located in Shinfield, Reading. One of the largest towns in the UK. It's not a city. Reading's part of Berkshire, also known as the Royal County of Berkshire, and it's a county town. The property is a 15-minute drive into the town centre. For people who know their road networks around there, there's good access to the M4, and it's just 25 minutes by rail to London. So Reading did very well as the ripple effect came out of London. People who wanted to maybe move out of London, live in nice sort of commuter towns, but still be very close to the city. It's a 4-minute drive to the University of Reading, and that will link in, Ben, to when we talk about potential exits, and it's also close to many amenities. Okay, so a bit more information just about the local housing market. So no surprise that 2020 has been a tough year for property prices. You can see there that over the last 5 years there's been an average growth of 9%. So that seemed to come quite a lot a few years back, but then it's held steady. And obviously, no surprise, there's been a bit of a drop off. But obviously, all our RICS valuation information, it takes into account what's happened this year. We're not just going to ignore everything that's gone on in 2020. For people's due diligence, here's some information on who's been providing the legals. So the conveyancing was by Harper James Solicitors, and the first charge has been registered, and it will be registered, with Loosemore Solicitors. So here's a bit of information about the project. I think Ben will get a bit further in and then start to talk about the exit because it comes up later. So the borrower has exchanged contracts on the purchase of this office block in Reading. Property will be converted from an office to apartments, and it's been identified by Ben through receiving this lead information from another person within the source network, and Ben is local to the area. So Ben's raising £688,500 for the purchase and conversion of the property. The apartments will then be sold on the open market in the 9-month period, with a second viable exit of refinancing the apartments. Investors get a first legal charge on the site, and the purchase price of the property is £390,000. So £320,000 of that will be utilised towards the purchase, as Ben is investing £70,000 of his own capital into the deal. The remaining balance of that £688,500 will go towards the refurbishment costs. The monies raised will be drawn down periodically upon submission of an independent monitoring survey report confirming works have been completed. We share these reports with investors, which isn't always the case on every platform, but we do share these. Okay, so yeah, just a bit more of the detail. So we've already mentioned the loan amount. The forecasted GDV is £1,055,000, so 1.055 million. The loan interest rate is 10% per annum. There is bonus interest of 2% on investments over £20,000. The loan term is expected to be 9 months, and repayment of interest comes at the end of the term. There's loan security in the form of a first legal charge plus personal guarantee plus borrower's equity. The loan exit is an open market sale, and as we mentioned earlier, the original plan, the original strategy, the planning has been approved. There's a RICS independent valuation has been completed. It is SAS compatible for those who've taken control of their pension, and it's also ISA compatible. The minimum investment is £250, and it's important to remember that returns are not guaranteed, capital is at risk, and that loan term may be shorter or longer than the 9 months. Here's a bit more about the details. So we've already mentioned the purchase price. Cost of works is £368,500. There's some upfront costs for stamp duties and legals. That's £23,800, which means that the total cost is £392,300. The borrower cash injection is £70,000, and that's how we get to this £688,500, which is going to be raised through the Source Capital platform. The freehold has been valued at £20,000, and that's included in the forecasted GDV. There's finance costs of £92,775, and the profit that Ben is looking to achieve from this deal is just under £180,000. The forecasted profit to GDV is 17%, loan to value of GDV, which I know is a crucial and important number for a lot of investors. That's 65%, which is nicely within our 70% threshold. There's a loan to value of purchase price of 82%, and loan to value of total cost is 86%. Now, what we also like to do, it's what happens within the banks typically, is we like to stress test the figures and the GDV. So at a 10% drop to the GDV, if actually the end apartments were valued in total at £949,500, there's still a nice profit in there for Ben. He's the one obviously who takes the first hit because the investors through the platform get the first charge, so they're repaid first. It then obviously impacts on his profit. But even at a 20% drop in the GDV, you can see there that gets us to £844,000. Which, if you have a look at the total loan required, is 688,500. Even when you add in the interest on top of that, there's still sufficient, obviously, to pay back investors should there be that 20% drop. That's shown a bit better on a slide later, which I'll explain again. So the exit strategy is the apartments are being built, they would go onto the market off plan, as we said. There's also a refinancing option, which has been agreed in principle should the open market sale take too long. And just to confirm again, interest will be repaid with the capital at the end of the term. Every project is evaluated looking at if the loan repayment schedule and the borrower's exit strategy is realistic to ensure the most secure and profitable plan is followed. Source Capital employs solicitors for every loan is provided. We work with the borrower's legal advisor. So I think maybe this is a good time, Ben, to get you back in, because I know when we were talking earlier, you mentioned that obviously you've been in touch with local estate agents and we've had the RICS valuations, but actually you had extremely good feedback, and there might even be an option to sell all of the apartments together. Is that right?
Yeah, so we spoke to 3 different independent estate agents. We just wanted to get their feedback on how these type of properties were selling, the values they're achieving for them. All 3 of them came back with higher valuations actually than the RICS valuation, which is, just confirms that RICS valuation is pretty solid to me. Obviously, they've got a good knowledge of the local area. So yeah, we're pretty happy with it. We're also in early discussions with a student accommodation provider for Reading University, who potentially may take all of the units. So yeah, what they do is basically just buy up local stock, as it's right near Reading University, and a lot of the students live in this area, and they just rent them out at they're looking for properties at a certain yield to rent to students. So yeah, we're in discussions with them. It just gives us another exit basically, and being able to pay investors back earlier.
Okay, brilliant. Yeah, that's always good to hear. Multiple exits is the key if we can find them. So this slide here, everyone, is just more for information purposes. So it just shows what would happen if the 6th apartment was created. So you can see there the total GDV jumps up to 1.185 million, still including that 20,000 freehold. And you can see there the 6 apartments and their valuations. Okay, so in terms of security for investors, there's several ways in which the loan is secured. There's a first legal charge. It's registered against the property for the full amount by the solicitors acting on behalf of the security trustee. Property values can go down as well as up, so your capital is at risk. And the question we had earlier was how does this work when there are multiple lenders? So essentially, it's the security trustee who holds that first legal charge, and all the lenders are on that, basically, on that agreement. So you would have your proportionate amount associated with that. So there's also a personal guarantee and borrower's equity. So the borrower has signed a personal guarantee for this project and has contributed £70,000 borrower equity. Again, somebody asked earlier about the terms of the personal guarantee. So we have everyone complete a statement of assets and liabilities, and that's how we determine and get the personal guarantee all signed off. So on drawdown, the funds are released in stages upon the borrower providing a monitoring survey report and approval from the security trustee. And as I said before, we share these with investors. We're also have FCA regulation behind what we do, which is whereby Source Capital is the trading name of JARC1 Limited, which is an appointed representative of rebuildingsociety.com Limited. And you can check both of the numbers there on the registers if you'd like to. So I think this is a good slide as well. It just shows how the fifth flat, I suppose, is Ben's profit. So once the fourth flat has been sold, that repays the loan capital and interest at that point. If you think back to that table with all the different prices of the apartments, that's how it ties to this slide. As we said there, the expected time frame is 9 months. But from what Ben said, you know, that could be a bit shorter, and obviously there's no guarantee that it won't be a bit longer. I think this slide is always quite good to illustrate what we call a safety margin. So on that chart there, you can see the loan capital, the £688,500 is in the dark blue. The light blue is the interest. Then there is the profit that Ben's looking to make, and the equity, the £70,000 that he's put in. So bearing in mind, why we call this a safety margin is because the first loss position that's created by the developer's own cash contribution, and then that profit, then that interest before a pound of the loan capital is even touched. So yeah, I think we've already mentioned earlier, but there's £70,000 and that's going towards the purchase of the property. So investors are contributing £320,000 towards that purchase. From start to completion, there continues to be a relatively healthy amount of value in the security and equity, which protects investor loan capital. But bear in mind, these are forecasted values. Capital is at risk, and there's no financial services compensation scheme protection on peer-to-peer. So just a bit more about the network that Ben's part of. So that network will assess the project and manage the launch. They'll facilitate the project through the Source Capital platform. They will support the borrower each phase of the project, and there's, like I said at the start, there's a huge amount of experience in all aspects of property investing in that side of Source. So there's 2% cash back on offer. Invest a minimum of £20,000, get an extra 2% return at the end of your term. There's also a £50 bonus. Invest a minimum of £500 and receive £50 cash back at the end of the term on your first investment. And just reiterating, I know we say it a lot, but it's important. Your capital is at risk. Investments are subject to our terms and conditions. Peer-to-peer investments are not covered by FSCS. And if you want to find out any more about those things, then you can find it on our risk statement, which is there on the website. There's different ways that people can invest. You can invest just as a regular investment online from £250 and get a return of up to 12%. All loans are secured by the registered first legal charge against the property. We also have an innovative ISA, an IF ISA. You can select individual loans and invest up to £20,000 tax-free per tax year, receiving the same 12% secured returns. We're not tax specialists, so any tax implications for you depend on your individual circumstances, and obviously they can be subject to change in the future. For those people who've taken control of their pension, you can invest through your SIP or your SAS. This will make your pension work harder, using your pension fund to lend with Source. It also comes with the flexibility to select the individual loans that you lend to. And just a reminder that investments are suitable only for sophisticated and high net worth investors. Your capital is at risk, no FSCS protection. So how to actually invest, you can visit sourcecapital.co, register, pick a project and invest and earn up to 12% returns per annum. For those who recognize John's picture at the start or who've spoken to John Wilson before, you can also just get directly in touch with John and he can be your point of contact. Investments suitable only for sophisticated and high net worth investors. Just once again, capital at risk, no FSCS protection. We also have a refer a friend scheme, so you can earn up to £250 in this way. If you invite a friend to invest with Source, you'll get up to £250 in cash when they complete their first investment. Simply share your referral code found in your dashboard, and yeah, that works such that it's £50 for investments of £1,000, £100 as soon as that hits 5,000, 150 to 10,000 plus, and £250 for investments of £20,000 and over. So this particular project is going to go live on our platform tomorrow morning at 10 a.m. On the 8th of October. And I think, Ben, we've covered off everything. I think we've covered all the questions that I wrote down from earlier. Is there anything else that you wanted to add?
Yep, I think we've covered most of it, to be honest. I mean, the thing I added first time around that just on the exit part, that I think it's a really good area to appeal to quite a large number of groups of people. So you've got the possibility of students living here. You've got first-time buyers who potentially can't afford flats directly in Reading town centre, as they can be quite expensive. So they might want to come, 10 minutes out and save some money, get a nice flat for a slightly cheaper price. And you've also got investors, who want to rent them out to student accommodation, and also the older generation that might want to be bang smack in the centre of town, to be able to walk to local amenities within a couple of minutes. So I think it's a really good opportunity, and we're looking forward to it.
Okay, excellent. All right, thanks a lot, Ben, and thanks again for coming back on to record this a second time. It's greatly appreciated.
No worries.
Yeah, and thanks everyone for watching this webinar, and we hope to speak to you soon. All right,
Yeah,
thanks
great.
very much.
Thanks a lot.
Thanks, Ben. Cheers.
Cheers.